trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound.
Morning, I am going to get off early. Morning, Jordan. Morning, Scott. Thanks for joining. Let's see. I got to put on my do not disturb. We have a family doctor's appointment this morning, so let me see if my voice is okay. I think my voice is okay. I think my voice is okay. Maybe we have to go back up to 500. Morning, Josh. Yeah, it's okay on the live. Excuse me. I got the dogs underneath me. I have already done my scans. And it does look like we're positive for the morning, so there's a lot of green. I got a lot to talk about. There's nothing that looks like NVIDIA's back up 3%. Looks like that 128 level served as a little bit of a bounce. Okay, hold on one second. I think I've been grumpy for the last few days, so people have started noticing. Yeah, NVIDIA. So what's interesting about NVIDIA is, remember, the algorithm got you out. We're back at the 134, but I think that 140 has been resistance. Is it going to go on a run? I mean, that's certainly looks like it. I mean, if I had to guess, I would say yes. Now, MicroStrategy completely broke down. We're at 386. So it's underneath the 9-day. Is it going to break down? I don't know. I mean, just look at the long one on MicroStrategy. But there's a lot to talk about today. Let's see. I will go over, but we're going to go over Micron because two people asked about Micron, and I probably pissed them off by saying, hey, why haven't you bought it? If you love it so much, why haven't you bought it? There's a strategy for a little post for buy and hold. I think I opened this one. Let me see. Yeah, I think I did. This guy, if you wanted to see a video about buy and hold, that's a good one. Nuclear still in play. We have 1, 2, 3, 4, 5, 6, 7, 8 top stock picks for 2025. Again, from analysts, not me. There's some great, huge, moving small caps. Quantum stocks went on a roll yesterday. Some of the big winners, NUKK, which ironically Brandon freaking held in his portfolio. He's like, I got that one. QUBT and EHTH, which is eHealth. And Apple, Josh Brown put it perfectly. Yeah, healthcare sector just sucks. And then I have strategies with RSI and MacD. And I'll kind of, we'll show you how to do that in Trendspider. We'll go over the core portfolio and my year on YouTube. So that's kind of where we're at. It's a good show today. I think it's a good show. Yeah, I if you didn't see it, NVIDIA released a new computer too. I mean, is there anything that they're not doing? It's a great company with a great CEO. I mean, it's founder led, and it's $3 trillion. That's a great business to buy into. So I have not been adding to my position, but I hold. I mean, I went over yesterday, and I'll include this weekend in my my year-end review of my own personal account. But it was crazy when I was looking at, like, there's these boxes, 4 boxes, and there's value and there's growth, and then there's large cap and small cap, and I'm 98% large cap growth, 98% large cap growth, and it shows that I'm way out of whack in my portfolio, but I'm beating the index, so I don't I'm not making the 174% that some of these guys on Spaces are making, the 200% that some of these guys on Spaces are making. I'm just not. I can't manage a multi-million-dollar portfolio. They're fine doing it in their, if they've got millions of dollars in their portfolio and they're up in that portfolio, I doubt that they're managing the, a significant million. You just can't do it. You can't. I mean, without a team, you can't do something like that, and you can't risk it like that. I mean, that's it's great if you have the balls to do it, but you're going to blow up an account, and so. I don't know if Nissan did. Morning, Troy. Okay, I'm going to get started because I do have to get going. So I am going to hit record. I've got the do not disturb on, and I know I'm going to get interrupted anyway, but. Good morning. It is Wednesday, December 18th. It's hump day. Humpity hump, 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 hump. We have a big show. I've got some RSI videos, some MacD videos. We're going to go over the core portfolio. We're going to go over the Dow, why it's down. Again, I'll reiterate that one. Why Apple is up and when you can expect it to pull back, because I think that hypothesis is exact. Big winners yesterday, NUKK, QUBT, more quantum stuff, and then eHealth company. Another big day for quantum computing stocks. Small caps continue to rise, and then 8 top picks for 2025 from analysts. Nuclear is still in play, and we'll go over Micron. A lot of people are asking me about Micron, and then I'll give my thoughts on buy and hold, because I think there's a lot of people who are having this muscle problem of actually buying on a down day and seeing that maybe it's not the last down day. Maybe you could go down further, and I'll kind of give you my thoughts on that one. But that's the show. The Qs continue to outbeat. They continue to beat the Dow. Is it going to happen forever? No, it's not. I mean, we can go and look at today's market. I can see that the Dow is up 0.3, the S&P is up 0.28, and the Nasdaq is down up 0.2. So right now in the futures, the Dow is actually beating. But when we look at the Qs, okay, a lot of people ask me on Trendspider, what is this purple line? So this purple line is when you're in the strategy tester here, and the strategy tester is where the algorithms are. That purple line is AI, and it's assuming, okay, with the price action, where's it going to go? And I haven't used this. You can see the standard deviation. These are like Bollinger Bands out there. And so Trendspider tries to predict this. Has it been right? I haven't used it, so I don't know. I think it's fairly accurate. I would trust Trendspider with their AI knowledge to go back and understand. And I think that's the way that it's going to go. Now, will you see a big pullback on this? Will it be exact? I don't know. But that's what that one is. And this is the Qs. So I assume that we are continuing in this direction. Now, this would go through January of 2025 up to there. So you've still got some days. This is the end of January where the Bollinger Bands kind of go out. I would assume, again, if the prediction and the hypothesis on specifically Apple and maybe some of the other large cap tech, I do think you see at the beginning of the year some downturns. So, but that's an interesting one. But again, I in my mind, I don't think that I'm selling. I haven't sold anything in the Qs. I continue to just hold this one. We're at all-time highs. Am I selling on a pullback? Absolutely. Or I'm buying on a pullback? Absolutely. I just still do have some cash on the sidelines, and I want to get more Qs. So I will get more Qs. Now, in the spirit of reviewing 2024, YouTube gave me this. And for those of you that watch on YouTube, thank you. Because my year on YouTube, if you're not subscribed on YouTube, I would say go over and subscribe. How do you subscribe? Well, you go over here to Linktree. And the YouTube is the third one in, and you can subscribe to YouTube. I've gained 1,451 by far, 20 to 30 fold. There are more people that listen on a daily basis on Spotify and Apple Podcasts by far. But this is the year on YouTube. Nobody watches the podcast on YouTube. And if you do, kudos. I think there is a benefit to YouTube where you can set alerts. You can look at the transcript. There's a lot of things that you can do on YouTube that you may want to do. But one of the things that you can do is look at things that I don't have a podcast on. And the most viewed video this year is how to set up your Trendspider. That's it. How to set up Trendspider to make you a better trader. And that video is the most viewed. So, go over to my YouTube channel if you want. I got almost 80,000 views for the year, 452 freaking uploads. Yeah, that's a lot of work in a year. 452 uploads, 651 comments, 3,441 likes. If you haven't hit the like button, then hit the like button. Again, if you haven't rated me on Spotify, rate me on Spotify. And 363 shares, that needs to go up. You people needs to start to, if you're listening, you need to start sharing. That's the key. So again, there you are on QQQ. Let's look at the next portion, Trendspider's holiday sale. Now, I know I said it yesterday to some people, but the holiday sale is on, okay? You get to it through Linktree. I'm going to give you some technical strategies here that you can easily just go into Trendspider and build yourself. And if you want me to build them, you just tell me to build them. And I'll build them and I'll share them out for you. But I think you can do this yourself. And it's 71% off. Here's the prices, okay? And here's what you have to know. Save up to 71%. And it is now. This offer lasts for 4 days to 71%, okay? We've gone over this before. If it's within your budget, get the advanced. Why? Because this comes with unlimited one-on-one training. You can see it right here, unlimited one-on-one training, okay? This middle one, the enhanced version, comes with one free session. So if you think you know what you're doing, save yourself $15 a month and get the enhanced. But go with the advanced if it's within your budget. Again, remember, this is a $2,662 normally subscription. You are saving a tremendous amount at $64 a month. The $45 a month, just upgrade for $4 and get the enhanced. It is worth it because it comes with the AI Strategy Lab and it comes with one free session. And you can set up simultaneous alerts on this one. Enhanced is so much better than standard. If you're just signing up under the regular price, I would say standard is perfectly fine for you. But enhanced or advanced, those are the two that you want. And again, for $15 more a month, take advantage of one free training session a month for $15 a month. For $15 a month more, just sign up for one freaking training session, and that's where you're going to get your value. What teacher in any realm, any skill could you get for $15 a month? And again, as you start using this one, you will have questions. You set up a training session and you say, I'm trying to do this. Can you help me do this? Boom. They will help you. Again, they can't give you financial advice. They can't tell you what stocks to trade. But if you say, hey, I'm looking for a strategy where the MacD crosses down and the RSI is below 50 and one of the moving averages, can you help me find a moving average? They might say, well, it depends on, do you want a long-term moving average? Do you want a short-term moving average? Things of that sort they will discuss with you, but they can't give you financial advice and they can't tell you what stocks to trade. So you have to have specific questions. But again, I think that's worth it. So Trendspider, sign up for that sale. Sign up for it now. Now, as far as yesterday goes, I took out UNH from the core portfolio. And I want to point this out. For anybody new that doesn't know what the core portfolio is, it is stocks. It is a set of stocks. Right now, it's 34 positions because UNH is taken out. Doesn't mean that UNH won't go up. It just means that UNH, this is a philosophy of mine, buy good companies with good products, with good profits, and good management. Okay? They don't have very good management right now. They are dealing with a social issue. And I don't think that they can deal with that social issue effectively. Now, when you look at this total, this heat map, you can see Berkshire's down, Pepsi's down. It's not all winners. Cleveland Cliffs is down. And when you look at this, if we were just to look at total, we're going to look at total. And we're going to look at movers. Here we go. There's Palantir up there top, 316%. NVIDIA, 199%. Meta, 118%. This is just this year to date. Okay? That's the amazing part of this is I don't trade in and out of this. Well, that might be since inception. Total. Yeah, that's total. But this move up here, this graph, this is year to date. And so this is just year to date that you can see. And that's distribution. So 88% of the 88 plus 88% is Costco. But again, when I add stuff, this is not a managed portfolio. I add a name, I add 100 shares. When I take out a name, I remove 100 shares. When NVIDIA split and it went up, I actually wound up moving it. Let's see, allocation. There we go. Do market cap. I want a list. There we go. Let's do a list. So I've got to sell 100 of Pan W. I haven't sold 100 of Pan W because they split 2 for 1. So I will do that right now. We will sell the 100 shares of Pan W, balancing the portfolio. And I don't need to let everybody know. So I'm not going to let anybody know, but sell 100 shares of Pan W. And so that's how I manage this portfolio, is I just use 100 shares of each position. And look, it's beating the S&P. It's beating the S&P year to date. So you don't, stock picking, you just have to pick the right stocks. And again, it's good companies. If you are not subscribed, it is free. I will include it in the newsletter for you to subscribe. But the core portfolio is up 41% year to date. The SPY is up 27% year to date. And you might say, well, the Qs are way up. They're up even more. The Qs are up 30% year to date. This portfolio is up 41% year to date. It's as simple as that. It's very, very simple. Now, another easy thing with Trendspider is you can just go on YouTube and say, you know what, give me an RSI strategy. This one that I found, he's saying that people are using the RSI wrong. I thought it was interesting. He's also got an RSI divergence trading strategy. I will include this one in the newsletter. And so you can use this for anybody who's new that signed up for Trendspider. Go over here, watch this video, and set up the strategy in Trendspider. And then go and back test it. And that's the beauty, is you can go and watch a video, set it up in Trendspider with simple English term language. You can say, hey, sell when the RSI is at 70, buy when it's at 30. And what does that strategy do? You can set that up in Trendspider with that exact language. You don't have to know how to program. You don't have to know, I have to use this one. I have to use this one. No, it is that simple. They use ChatGPT to find good indicators, and you can say how to do that. And so you can take this in YouTube and just set up a strategy like that. And so, I include this guy, RSI trading indicator. It's in Trading Labs. Okay. Or I'm sorry, I think it's in one of the other strategies. He's got it set up because Lux Algo actually uses another, I think it's TradingView is that he uses. But yeah, you can set this up in Trendspider. So I give you that one and you can learn about the RSI. The other two that I'm going to give you are MACDs. My 4-hour algorithm, it's based on the MACD. It uses moving averages and the MACD. Again, you can set this up in Trendspider. So anybody that's new to Trendspider, I would urge you, go and just Google or look on YouTube and say MACD strategy and go and try and build one. That's how you're going to learn to use that tool. And I'll include another. I tried the super accurate MACD strategy, and this guy goes over it. And this is in TradingView. But you can set this up in Trendspider with natural language. Go and learn how to do it. If you have a one of those training sessions, you could bring the video to the training session and say, this is what I want to learn how to do. Can you teach me how to build this? Again, that's why that top tier, the advanced tier, is so important, because you can bring a product manager, a product expert on and say, I want to learn how to set this strategy up. Can you help me? And yes, they can help you set it up. And yes, they can tell you how to backtest it. That's why it's so important. So if you don't know anything about technicals, that's why you get that advanced. But this is such a great tool that you can take from these experts who say they're gurus, and you can go and backtest it on the stocks that you want to train. That's it. That's it. Now, so before we do this, let's look at DIA, because I want to show you the Dow. And DIA is the spider Dow sector, and we're just going to take this one out, remove this segment. This has done really, really well over the year. Again, it's not beating the Qs, but DIA has had some success in the algorithm. Over the past 2 years, you've made 23%. Buying and holding has made you 29% over the past 2 years. It's good. But when you see this weakness right here, okay? This weakness, December 3rd, it peaked at about 450, and then, 451 on December 4th, and then it started falling. And what happened on that? Well, your grandfather's index, the Dow, is now down 9 days in a row. The latest strength has been isolated to mega cap tech stocks, which has been gaining. It's the longest stretch of downside for the Dow since 1978. Although that sounds scarier than it is. United Health Group, the second largest component of the price-weighted index, is driving the weakness. The stock has come under pressure over concerns that the upcoming Trump administration's regulatory overhaul will cut into the healthcare profits. And it's not just United Healthcare that's falling. It's the entire healthcare sector. XLV is the sector. It's now down 13% from its September highs, and investors remain cautious about the industry's prospects. I would not be putting my my entire portfolio into healthcare right now. This is XLV. And since September, you can see we're in a downward trend. This is a downward trend that you don't want to be a part of. Now, when you look at big cap tech, look at the difference in these. This is XLK. This is the technology sector. And yes, we had this July high, and we've been sitting around this. This old resistance could turn into new support. So you're trading right now at $241. $238 is your support. So if you come back, I believe that 238 is support. Now, it could be killed by what Josh Brown is talking about here. Apple is the most overbought stock in the S&P. And when he's talking about overbought stock, he's talking about the RSI, which we just went over. Learn the RSI. Okay, if we go to the daily on the RSI Apple right now is at 80. 80. It is the most overbought stock. I think they said it was 90, so that must have been an intraday one. But again, it is the most overbought stock in the S&P. And Josh brings it up. It's at all-time highs. And he basically said, if you haven't been in Wall Street long enough, then you may not know this. But what will happen in January is every individual investor and investment house, okay, the advisors, RIAs is what they're called. I forget exactly what that stands for, but it's the RIAs. They will be, it's $7 trillion worth of money, I think is what he said. They will be rebalancing their portfolios. And guess what? With Apple at all-time highs, it has become too large a position in most portfolios. We talk about this, how the Alpha Picks portfolio is so good because it's managed. And when a stock gets to 10%, they whittle it down and they take it down. And so they tell you, hey, sell this portion of a stock because it's become too big of a portion of your portfolio. That's what will happen to Apple in January. And it happens almost every January, okay? We're going to go back and we're going to look at the month of the year. We're going to look at, let's look at the week of the year. And we'll take this back to 2005. We'll just take it back to 2005. Look, it's not one of the best. The first week, 50%. Second week, 58, 58, 58, 58, 53, 53. But what's the best portion of the year? This one. Nobody sells Apple on the 52nd week of the year. Nobody sells Apple on the 52nd of the week of the year. So what do you want to do? If Apple has become a large portion of your portfolio and you do want to trim it, take it this year. Even though you should have some room in your portfolio, in your capital gains, or if it's a retirement account, I would urge you at all-time highs between now and the end of the year, which is next week, I believe. It's the last trading days of the year. Sell Apple and then buy it back, because I believe that and watch this 7-minute video. And I think Josh Brown is on for maybe 2 minutes. He puts it so eloquently, even though he's screaming at you, but he does it so well. And I believe him. And so I'm looking to trim my Apple and pull it back a little bit and then put more into it in January as it dips. I do believe that these guys, again, he points out, it's with money coming into the markets, into ETFs, name an ETF that doesn't include Apple as the top 5. Just name one. I mean, it's the momentum, it's the dividend, it's everything. It's the market cap, whatever the ETF is. If it's following the market, Apple's in it. So when money comes into the market and these ETFs get inflows into their ETF, they buy more Apple. What happens? Apple goes up. It's a good one. Again, it's a great stock. And like he said, the quote that stuck in my mind is, even with the gun to my head, you couldn't tell me to sell Apple. And he's not. He's not. And again, I've said I still have shares that I hold from 2006. 2006. So it's just one that I continue to like. Now, some big winners yesterday. Let's look at these because this is more interesting. But NUKK was a huge one. And essentially, Brandon reaches out to me on freaking Twitter. He's a longtime listener. And he's like, dude, I've got this in my portfolio. Well, when did you buy it? That's what I said. I said, honestly, if you bought it anytime this year, you're good. But I can't believe that he bought it. This is a reverse split for 1 for 8 because, again, it was going to get delisted. But NUKK went up. And this was up huge. This was up enormous. You can see it. It went from, let's see, $1.40, and the candle goes all the way up to, let's see, $16.86. So if you bought it at $1, we can look at how do you trade this one? Well, look at the 5-minute chart. Just look at the 5-minute chart. Again, you could have bought this at the beginning of the day at $1.80. It had confirmation, and you could have sold it at $11 through confirmation alone on a 5-minute chart. Now, let's look at QUBT. This is quantum, and we've got a story on quantum. They continue to go up. You can look at a 5-minute chart on QUBT. Okay, yesterday, a 5-minute chart on QUBT We can look at this one. That yesterday was the 17th. Look at this where it goes back down to, let's see, December 16th. We start here. We opened up at right here. It gapped up. Well, when it gapped up, did you buy it? Because it had confirmation. It lost confirmation. You could have held on to it. You could have sold and diamond hands. Again, we're talking about people that are afraid to sell and trade. This is probably the best way to learn to buy and hold. Because if you trade a 5-minute candle, I think that your longer term stuff, you're going to find out that you can't trade on 5-minute candles because it's very volatile. And if that's the case, then you're better off just buying and holding. Another one that went way up, EHTH. This is eHealth. EHTH. I have no idea what this company does. No idea why they're here. But this is a 5-minute chart. We can go back to a 5-minute chart here. And you could trade this on the 4-hour algorithm. You can trade it on the 4-hour algorithm. It pumped up. And look, it never got back above where it was. But look at the MacD reset. Is it going to pump again? I highly doubt it. It's good that it's up 2%. So maybe it pumps again. But those are some big winners. And we had another big day for quantum. As NASA news and peers follow. QUBT was up 51% yesterday. IONQ up 4%. QBTS was up 16%. RGTI was up 32%. Big news. Again, these are big flyers. QUBT, we can go back and I said it yesterday. Go back and listen. If you didn't listen to yesterday's podcast, go back and listen. Eli's got a great in the Daily Stock Pick newsletter in the chat. He's got a great strategy. He's like, yeah, I've been trading the 4-hour algorithm on some of these huge names. And it still has you in at 69 cents. You could have gotten in at 99 cents. When this started popping up in the news in November, you could have gotten in at $1 because you said, you know what? Oh my God, the algorithm has you in. I'm going to get in. What the hell? It's at $1. It was at 69 cents. So maybe I'm 30% higher, but it's putting in a nice shelf. Boom, pops up. Then it gaps down. And then it pops right back up. Again, it's a crazy sector. And nuclear continuing to run. Is it going to continue to run today? Looks like it's taking a little bit of a back turn. But you can trade those. And as small caps ride the Trump wave, here are the best and worst small caps from the from the Seeking Alpha Quant. And you can look at what's the top one? QUBT. We just went over it. It's still got a strong buy. Go and look at some of these. Again, it's a strong buy. QUBT has been a strong buy since, let's see, $4.40. It's now trading at $16. That's 4 times your money. Profitability sucks. Their valuation, it's okay, but they're not making money. Their growth, fantastic. They don't make, revenues. What's that, $400,000? Again, it's a sector that you can trade. You can go and read the virtual analyst report. Go and read all about it. Operates in highly competitive quantum computing. IBM, Microsoft, and Alphabet are ones that those are big sector ones that if you want to bet on quantum computing, you could do that. Now it goes over their valuation, goes over their summary. These are virtual analyst reports are vital if you're looking to invest in this stuff. They are fantastic to try and find out everything. Concerns raised by Seeking Alpha analysts. Positive raised by Seeking Alpha analysts. You can read about the entire stock, and it's all AI driven, and it is nightly updated. That's what I like about it. It is updated nightly based on news. So if you want that, you can go over here to Daily Stock Pick, okay? This is in the bundle. It's the virtual analyst reports come with premium. And I'd tell you to get the bundle. You save $159. Now, if you just want the virtual analyst reports and you just want the quant, you can get that with a free 7-day trial. That's the next link that's down there. Okay, that's the third link. And then if you just want Alpha Picks, I've gone over it before. It is a data-driven portfolio with 2 stock picks per month. We just got one on the 15th. You get one on the 1st as well. And they sell when the stock shifts to a sell rating. And again, you are alerted when to sell. It's not like you have to sit back. This is a no-brainer portfolio. And since its inception, it's up 179% when the S&P is up 60%. You are nearly tripling the S&P. So I'm in this one. I like it. I like it a lot. Again, quantum stuff, small caps, it's all there. Alibaba, is it a play? These are part of the top. Well, we're going to go over a couple of other top stock picks because Square was named a top stock pick from Barclays, and Josh Brown loves this one. He said technically it's setting up nicely, and when you look at it, yes, it is. He bought it down here at about 70 because he said, hey, on the weekly, the Bollinger Band, and he brought this up. He said on the weekly, the 50-day just started moving positive. You're trading on the top end of the Bollinger Bands, and he said the RSI is in reasonable territory and the MacD is level. He brought that up on CNBC. He's not a technical trader, but he said my technical traders brought me this one. Now your 200-day may provide some resistance at 109. He says that on the show. And again, this is named a top pick from Barclays. He said, take a look at Robinhood, take a look at SoFi, take a look at PayPal. This is the technical stock that looks the best. I like it. Now, Zscaler was named a top pick by BTIG. Stephanie Link loves this name. I love Stephanie Link. I think she's a fantastic investor. She says it has unfairly been beaten down. What's a strategy to trade this one? Maybe it's the 4-hour algorithm. Okay, we can look at this one on a weekly. It's trading on that 200-day. Now, will it pump back up here to 261? Maybe. We can go and take a look at this one in the quant, and you can go over here. It's a hold from the quant. Why is it a hold? Well, we can look at it. It's probably the valuation. The valuation is a bit much, but Stephanie made the case that the valuation isn't really that crazy, even though it's 66, because she thinks that the growth will take care of that. And the growth is a B-. And you can see the revenue year-over-year growth, 30%. Levered free cash flow, 27% year-over-year. And that's what she mentioned yesterday. So Zscaler, if you want to trade it on the 4-hour algorithm, you can develop a strategy maybe that's better. But I can see on the weekly, the MACD is not extended. The RSI is in no man's land at 53. Maybe it's not a bad one. So one of the top stock picks as a value play, BABA. BABA was named a top pick by Barron's. And this one is interesting. Let me look at my notes because I wrote these down. Okay. BABA has $55 billion in cash and investments on the sidelines. Take that out, and they're trading at 12 times earnings, 1.2 times sales. You're getting a dominant e-commerce business in China and the largest cloud business outside of the U.S. at a fantastic price. Does this fit your strategy? Doesn't fit mine. But would I trade it? Absolutely. I've traded in the past. The algorithm makes you 25%. Again, if you want to find a strategy that works for BABA, it's the 4-hour algorithm. You make 25% versus buying and holding has lost you 3% over the last 24 months. And you might say, well, I got to get in and out all the time. Here's the great thing about Trendspider. It's only 29 positions over 24 months. So, and you can set up alerts. You can literally say, tell me when I can get in and tell me when I get out. And then you get a text or an email. If you're a boomer, it's an email. If you're Gen Z, it is a text. And you can immediately just go into your mobile phone and buy it. Okay, it's just like alpha picks on the 4-hour algorithm. You can do it, and if it backtests well enough, you win 41% of the time. That means you lose 59% of the time, but your average win is 7.7%. Now, would I trade this one on the 4-hour? It doesn't make sense to me. I want this one when the 200-day starts to look a little bit better. But just like we talked about with Square, the 50-day has turned. And if that 50-day is going to provide support down here at 83, buying at 87 and moving up to the 200-day at 111, like it did here, is a pretty good deal. I don't know. That's an interesting one. So next ones that are big top picks are AVGO. We've gone over this one. AVGO and Marvel. AVGO had a huge pullback yesterday. I think it was down something like 14. Let me see. Let's go and look at AVGO. AVGO, it was down, let's see, 3%, $9. It was down much more than that during the day. So it was down much more than that. The valuation is crazy. Okay, we can read the virtual analyst report and we can see, if you go down to valuation, you can see AVGO's valuation appears stretched. For instance, its price to sales is rated 20.15, significantly higher than the sector at 3.31, indicating the stock might be overpriced. The price to book ratio is 15.54, further highlights its expensive ratio compared to the sector. AVGO demonstrates a mixed growth outlook, while its revenue growth year over year is impressive at 44%, significantly outpacing the sector at 4%. That's what you want to look at. Now, it doesn't bring up the PEG ratio. And the PEG ratio going forward is 1.75. And so if they continue their growth, then that should be a good metric to look at. Okay, if they continue their growth. When we go to Wall Street says it's a strong buy, but their average price target is 227. That is 5% down from where you are today. Now, I've made mention before, I am holding this one long term. That Bollinger Band trading on the upside, in my mind, it has nothing but downside from here. But where will it probably come back to? Probably 200. I would assume that 200 is probably where it's going to go. Am I selling at 240? No, I want it as a long term. And, again, there's this mindset for me where I stay in this one for a very long time. And the reason I stay in this one for a very long time is because I've identified it as a potential long-term investment. And I like this as a long-term investment. So I'm holding it until next March. And that's just my play. Now, JP Morgan also mentioned Marvell is a top play. So let's look at that one. Marvell in the 4-hour algorithm, you make 113% versus 175% if you buy and held. So I don't know much about Marvell. I do know about Broadcom. And I don't hold Marvell. But if you got in here at 73, boy, that's a great trade. That was just back October 4th. Now the MACD's a bit extended. Are you selling? Again, it depends on your time frame. If you want to wait for the 4-hour algorithm, you can wait for your 4-hour algorithm. But I like this one. Again, Marvell is one that's probably a bit expensive. We can go and look at the quant on this one. The rating on the quant, it's a hold. But again, Wall Street has it as a buy. And instead of 5% downside, this one's average price target is 118, which is a 5% upside. So maybe this one fits your profile better than AVGO. Now, Morgan Stanley named Meta and Reddit as their top picks. So let's go and take a look at Meta. Meta's in the core portfolio. I've said, if you can get this one under 600, just buy it under 600. And I think this is a long-term strategy, but you can see the MACD's extended. The RSI at 56. Am I buying this one here? Let's take a look at the weekly. The weekly on this one, it's crazy. You know, the MACD is a little bit extended. Is it most extended? No. Back here when the stock was trading at 486, it was even higher. The RSI was even higher. So this one, while the stock has moved up, these indicators have actually just traded sideways or down. So you want to buy on those dips. Again, you look at this 546. I talk about it all the time. Old resistance, 1, 2, 3, turns into new support. So if you can get this under $600, I think that's a good deal. Zuckerberg was just at Mar-a-Lago. Now we can go over here and take a look at Seeking Alpha, and we can type in Meta, and we can say, hey, Meta valuation is F. Wall Street says it's a strong buy. What's their average price target? 5%. Go and read the virtual analyst report. Reddit has been crazy. I don't know if this is covered by the quant. It's not covered by the quant, so you don't get a virtual analyst report. But Wall Street covers it. They say it's worth $141. This is another Morgan Stanley top pick. I'd be a little bit careful with this one. And the reason I would is just because the valuation is a bit nuts. The PE going forward is 90. And that I'd rather see you buy Meta than Reddit. It doesn't mean that I don't think that Reddit is going to underperform Meta. I just think, again, the algorithm, this has only been out 9 months. So you don't have, on a weekly, you don't have any moving averages. So I can't kind of say, hey, it's at the 50-day or the 200-day. So it doesn't fit my wheelhouse. But the algorithm got you in here at 60. You are trading at $168. So if you traded with the algorithm, you've been doing great, 206%. And it provides you some safety. But again, it's only 9 months and it's only 4 positions. You win 3 out of 4. I mean, that's the thing is, see that one loss at the beginning? That's it. But if you bought at the beginning, you're up 242%. So up to you. what you want to do. Now, KeyBank names Robinhood a top stock pick. We just went over Square. Robinhood is out of control. Vlad just donated, $2 million to Trump's. He's getting in on the, hey, I'm going to cozy up. He wants Hood to be a major brokerage, and he's doing so well. Sports betting may be coming here. Again, I don't follow this one a lot. I just hear a lot on the internet. I don't personally own it. I don't necessarily want to own it. I don't believe in this company. I think they manipulated with the GameStop stuff. So it's not one that I particularly like. If you're interested in trading with something, I personally trade with Webull. And so the fifth thing down here, Webull has replaced my sports betting. And when you join Webull today, you can get free shares. So go to the link tree, linktr.ee/daily stock pick, and you can go down here, and it's the fifth one. Join Webull and get up to 75 free stocks. Do I like Hood? For me, Hood doesn't fit my portfolio. It just doesn't. Hood is just one that it does. The quant says it's a hold, and it's the valuation. The valuation is what's really, really tough. Now, the peg going forward, it's at 5.24. That's even high. Wall Street says it's a buy. Their average price target is 6% upside from here. 6% upside. So, and there's 17 analysts that cover it. So it's not a minor one. For me, it's just not a buy. I know plenty of people who have made plenty of money on this because year to date, it is up 226%. When you trade it in the 4-hour algorithm, you make 333% versus buying and holding makes you 342%. Over 24 months, it's 25 positions. You win 40% of the time. You're in here at 29 and you're trading at 41. So again, it's a top one from KeyBank. Now, don't forget nuclear. There are a lot of nuclear stocks. Oklo stock gains. After landmark 12 GW nuclear deal with Switch, it is up in pre-market 15%. We talked about how you can trade in pre-market. Oklo, you can trade when you get news like this. You go and look at Oklo, and we can look at the 5-minute chart, and then we can look at after hours. And you can see right here. Could have bought it at 20 to 22. That's a nice 10% gain in couple hours? So know how to trade, know when to trade, know what you're doing. If you just want to look at this one in the 4-hour algorithm, okay, over the last 25 months, you make 78% versus 85% buy and hold. And it just got you in at 19. And you're trading at 22, I think. Let's see. In pre-market, you're at 22. So it got you in at 19, probably setting up to go even higher. I mean, look at how the MacD reset itself. It's super, super low. And then they get this big news on a contract. And remember, there's TLN and a few other ones that I really like. If you go down here to ranked in industry, and it's a utility, there were other ones that I think it's TLN is the one that I liked when I did more. Talent Energy Corporation. That's a strong buy in the quant. And we could look at the year to date. It's up 221%. In the last 1 month, it's even. Last 5 days, it's down 2%. Last 6 months, it's up 76%. You can see the chart. And Wall Street, there's 10 analysts that cover this. They think it's a $251 stock, which is 22% upgrade. So, let's look at this. Okay, there was in the Facebook group there was somebody posted. I forget her name, but she posted, "Hey, it's hard for me to buy on down days." And hard for me to see stocks go negative after I buy them and things of that sort. This is part of why I say, hey, you have to know why you buy. Look at this guy. This is Brandon Smith. He's a 32-year-old video producer. I don't know when this was taken, but he bought Tesla in, I believe, let's see.
Year-old video producer. So I originally invested in
2017. So he bought Tesla in 2017. He's still holding. He bought $10,000 worth of it in 2000. I would never suggest, somebody go out and just buy $10,000 worth of a stock. It has paid off. I would have told him, hey, dollar cost average your way in and add to it as it runs and blah, 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 the whole thing. But it's now $1 million. He's never selling. I have a friend who in 2018, we bought Model 3s together. He bought the Performance Model 3. I bought the regular one. And he loved the car so much, he moved his entire portfolio to Tesla. I said, you're crazy. The man today is worth probably 5 to 10 times what I'm worth. probably 5 to 10 times what I'm worth. He buys Ferraris, buys Lamborghinis now. He's a car head. He retired. He's completely, living single in Vegas. Fantastic move. Who was I to ever, and even when Tesla was down around 200, I called him and I said, dude, you've got to sell. This is a weak stock. I feel bad if you're going to go down. And he said, and he reiterated this to me. He goes, even if it trims down from 200 to 100, and I'm 50% of what I was worth, my life doesn't change. Is it going to zero? No. But my life doesn't change. And that's what he said. And so when you look at things, and compounding is the eighth wonder of the world, it's a muscle. And so buying and holding is a muscle. And I know plenty of people that can't build that muscle. And so what you want to do is go in small, here's what you do. Okay, say you're going to invest $1,000 into something, and you believe in it, like QQQ, like VOO. It's just tried and true, and we're at all-time highs. Okay, but you're going to do $1,000. Buy $1,000 worth of it, and then trade $500 worth of it. Okay, you're going to trade $500 worth of it. If it's $100, trade $50 of it. Okay, you're just going to do that so that when you are looking at these things, you're going to look at, did I do better trading or did I do better buying and holding? And you're going to have a 5-year timeline, because that half position isn't going to change your life. It's not going to change your life, but it could in 5 years. So again, you want to look at, am I doing this right in trading or am I doing it wrong? And that's how I would suggest doing it. Now, I want to point out, this is investing.com, and they have a pre-market mover, and it's filled with freaking pop-ups with ads and stuff. But I want to point out, Snow Lake Reserve, there are plenty of stocks in here that are up 100% today. Okay, LITM. How would you see something like this? And how would you go into Trendspider and look at this? LITM. Look at the shit show that is LITM. Okay, there's no way I would buy this one on something like this. But if you see that and you go into the 5-minute chart and you say, oh my God, I'm going to go and look at the 5-minute chart. When can I buy this? Find a confirmation line, one of the moving averages that you like, whether it's a 9, 21, 50, whatever, and use it as a confirmation. Train the muscle to trade on a 5-minute chart. I think you'll start to look at weekly charts different on a buy and hold level if you start to trade $10 again on Webull. $10. Skip lunch. Skip lunch today and trade $10 on Webull. Go and sign up for Webull and trade $10. Use Trendspider to do it. Use Webull to do it. But use charts to do this type of stuff. That's where I would lead you to. Now, social requests. Andrew, what are your thoughts on SYM? Let's look at SYM. What is SYM? Symbiotic. I don't know what they do. From a chart perspective, I see that it gapped up on earnings. It gapped down. No, it gapped up on earnings and then for some reason gapped down here on November 27th. My assumption is it wasn't good news, and it looks like it's significantly weak. The algorithm has you in at 29%. Algorithm doesn't work on this. It only wins 36% of the time. If we look at a weekly chart on this one, I don't have a 200-day. So it's a rather new stock. It's a SPAC. Symbiotic. It's a SPAC. So it's a SPAC that came out of a SPAC at $10 back here in 2022. So let's look at SYM here. And this is what you do. And I tell people, I said, I'll add it tomorrow. And I said to this person, Andrew, I said, I'll add it tomorrow. But remember, I don't own this stock. I haven't done research in the stock. I'm going to do 30 seconds of research, and I'm going to do it. But I will tell you, the quant says it's a strong sell. I would never even trade this one. In my mind, why would I sell something or why would I buy something unless it's a super short-term trade that is a strong sell in the quant? And they even tell you why it's going to perform badly. Has characteristics which have traditionally associated with poor performance, has decelerating momentum, inferior profitability when compared to other industrial stocks, to the point that it gets a sell rating from our quant. The company has a 1-year performance of minus 51%, while the industrial sector is up 53%. I mean, again, what attracts you to this one, Andrew? Is it the chart? Because I'd say that's a shit show of a chart, and it's a SPAC. And if you don't know what SPAC is, Special Purchase Acquisition Company. And so what they do is they hold these symbols, and then they buy the company, and they offer a shit ton of money to executives and things of that sort. And I don't think that it's a very good stock. And you look at that warning, and Wall Street says it's a buy. There's 17 analysts that cover it. They think it's worth $35. So depends on who you want to listen to. And it depends on, I'm not saying that the stock can't go up, but it wouldn't fit my profile. And so what do I think of it? Staying out of my portfolio. I'm not getting into it. Al Gua from Spotfiy. As always, thanks for your work and what you do from everyone. Thanks. Thoughts on Micron before their earnings. So Micron's an interesting one. And I also got a question from, it looks like, what's the Kymer Slayer from Micron. He says from Reddit, Micron has been on my watch list for a while now, and I've never pulled the trigger on it. Also, thank you for your channel. I listen on Spotify. It's really good to get a second look at stocks. So here's the thing. And I told Kymer this, if it's been on your watch list for a while and you haven't pulled the trigger, I would ask you, why haven't you pulled the trigger? And I did. And he said, because I don't have a lot of, I'm a long-term investor and I'd have to sell something in order to buy it. That tells me you're not interested in buying it, because if you were interested in buying it, maybe it would be something of a situation where you've already done it. Now, I've already said this. Micron is not making money right now. So if they announce today that they're actually making a profit, I think it then gets into something that I might be interested in. But this isn't my wheelhouse. I own a couple of chip stocks. I own Broadcom and I own NVIDIA. Sometimes I'll get into SOXL and SMH. Those are the only chip stocks that I currently know about or do. And so the virtual analyst report for me is incredibly important. And when I look at this, competitors, Samsung, SK, and Western Digital, and you look at this valuation, mixed valuation scenario. While its forward peg of 0.24 shows an attractive discount compared to the sector, indicating underpricing, its EV/EBITDA of 100 is significantly higher than the sector. Again, they're not making money. Growth. Micron's growth is impressive with forward revenue of 44%, far surpassing the sector median of 6%. Profitability. Micron's profitability is strong with an EBITDA margin of 36% above the sector's 10%. Well, why aren't they making profits? Furthermore, the company has generated approximately $8.5 million in cash from operations, highlighting its efficient management. Momentum. Momentum is strong with 1-year performance of 33%, significantly outperforming the sector. Revisions. Recent earnings revisions reflect a cautious outlook with 20 down earnings per share, overweighting the 11 upward revisions in the last 3 months. Revenue revisions are more balanced with 16 up and 15 down. I don't want half the analysts telling me that revenues are going to go down. I don't want, 30% of the analysts telling me that earnings per share. Look, earnings per share down 20, earnings per share up 11. It's cautious. For me, in the chip sector, the only one right now that is screaming a buy is NVIDIA. And this one in the Micron in the algorithm makes you 72%. If, to Kymer's point, if you wanted to trade this one, you might make some money. 72% isn't bad. It's 29 positions over 24 months. So create a strategy that you want to get into this one. If it's screaming at you that you'd like to buy it. For me, it's just not in my wheelhouse that I want this type of stock. Again, it's not profitable. When it's profitable, maybe I pull into it. But look at that slide. Again, if we look at a weekly, this one looks like it's just sitting there at this 97. Is that providing support? Looks like it. That's the previous high back here in March 2021 and January 2022 until it pulled back. And then it just shot up. Is it going to get back there? Well, some of the valuation stuff and some of the Wall Street analysts, their analysts are saying it's worth $145, even though they're bringing stuff down. So there's 39 analysts that cover this one. And it's number 5 out of 66. What's the number one? Rigetti. That's the quantum computing stock. Look at the year to date on Rigetti. It's up 1,000%. If you would have just looked at this one when it became a strong buy, let's see, it was a strong buy at $3 here. So if you were watching Micron, and you said, hey, I want to find out what's the, we're going to go back to Micron, and you just go down here to the quant ranking, and you say, oh, I want to see what the top quant rankings are. And if you go there and you just saw Credo or Rigetti or SQNS or SkyT, maybe those are ones that, Rigetti has a $3.12 billion. I don't think these guys are even making money. These guys do have a revenue stream, so it's not bad. But Rigetti, it's up 32% yesterday. And year to date, it's up 1,000%. So again, if you're looking at Micron, I think there's better opportunities out there. It's not in my wheelhouse. Doesn't mean that you stay out of it. But I do think the fact that you're not in it says a lot more about your strategy and what your thoughts are on the company than what my thoughts are. And that was my point. I wasn't meaning to be like a douche or, kind of a dick. But my point is, if you have it on a watch list and you haven't pulled the trigger, why? Because if a stock like Nvidia presents itself to me where they're making all of that stuff and I believe in it, then I'm going to pull the trigger. And if the chart looks good, I'm going to pull the trigger. Right now, for me, chart doesn't look great. It could be supporting right here at 99, but I'll wait until it's in a clear upward trend. The 200-day on a weekly is still in an upward trend, and those Bollinger Bands are cinching up. The MacD has reset itself down at the oscillator. This could get ready for a big move. But again, it's not my thing. Not my thing. Some scans. What's interesting about this one, AAPX. This is a leveraged ETF. This is 2 times long Apple. And this one you got in at 32 here. You're trading at 39. And it got another entrance into the algorithm. If you had alerts, you would see like MicroStrategy right here. It has these alerts. MicroStrategy, by the way, it bailed under 400. It's at 388 right now. So is this one of the 50% 50% wins or 50% losses at that 403? I don't know. But again, it kind of failed on that one. But I would, Bitcoin is just going to continue to go up. I think this is just a wee bit dip in that one. Again, remember, Trendspider sale. It only goes on for 4 days. So if you have any questions, hit me up. Okay, I will talk to you guys tomorrow. See you, bye. Morning, Mark. Morning, Kevin from Lakeland, Florida. Morning, Cube. Clove is like Oscar, I think. I don't like Clover Health. I talked about the SPAC. This is a SPAC from Chamath. I hate this one, but it's up 237% this week. And Oscar this year, Oscar Health, which is my healthcare company. This one's up 47% year to date. So Oscar, in fact, I think this one trades pretty well in the algorithm, if I'm not mistaken. Yeah, 634% versus 413. The problem is recently it just hasn't performed super well. And you can see, I've covered it before because that was a clear double top. And it just, in order to get back there, it's going to take a huge lift. And so I would assume that this one trends a little bit more down on the downside. Probably gets to, if I had to guess on Oscar, I would guess that we're probably going back down to that 10. And that's going to provide some support there. But again, that would just be a guess. It didn't provide much resistance at 10. Maybe just below 10 at 998 or something. Because you can see a couple of weeks here, it kind of bounced around. This was a top at 936. This is a top at 948. This is a top at 937. And then all of a sudden you get to 1212 and it just took off. So, and it went all the way to 22, 23. Okay, and Clove is probably similar. We can look at Clove. I just don't like it because it's SPAC and I hate Chamath. Remove all. I'm We're going to take that out. Clover just got you in on the 4-hour algorithm. This one makes you 133% versus 183% buy and hold. You win 33% of the time. But, I mean, is that a 200-day that's pointing down? The 50-day is pointing up. I'd rather buy it if it were at the 50-day. I would rather buy it there thinking that it's going to go to the 200-day than buy it at the 200-day thinking that it might go to the 50-day. So, is AlphaPix's portfolio down? I don't even know. Typically, how long ago? I mean, I've held Apple since 2006. I don't think there's a typical. But, I mean, I mentioned this in the Facebook group. I trade far less than I buy. I mean, I don't do many trades. MicroStrategy, I trade. iBid, I just buy. What have I traded? I have traded DraftKings. I have traded Mara. I have traded. We can go and look. Let's see. There's the core. Where's the core portfolio? Let's go and look at and then I'm gonna go because I do have to leave. Let's see. Savvy Trader. Oh, why is this light? I need to change this all to dark. Let's look at the trading portfolio. And we can look at this one. MicroStrategy I traded. MSTX I traded. iBid I bought. Shark Ninja I traded. Celestica I've traded. DRN I've traded. Shark Ninja I've traded. SMCI I traded. Carnival I traded. DRN. VRT I've traded. Broadcom I've just bought. I bought that one September 30th. VRT. Amazon. TQQQ I trade. Uber I bought. I'm still holding Uber. I probably should check in on that one. So I trade, but not much. I mean, this is going back. Shopify I trade. GCT I traded. DocuSign I trade. Ulta I traded. Dell I traded. I did trimmed Apple trading in the trading portfolio, even though I bought it. CrowdStrike I traded. Dell again I traded. But it's once a month I'm trading. Twice a month. Something like that. So I'm not trading that much. Yeah. Leslie, I'll tell you. It's a portfolio that's proven itself. I think it will prove itself again. I'm all in. I just listen to what they do. So, again, I think that's the muscle that I have that I think a lot of people don't have, which is buy and hold. And I don't even look at the AlphaPix performance. I just don't. I look at this. I mean, literally when I have AlphaPix in a portfolio, I just when they tell me to do stuff, I'm going to do it. And if you look at that AlphaPix stuff, I can't show the performance because then it shows the portfolio, and that's not fair to people who haven't bought. By the way, there's 21 likes in here, 46 people. So hit the like button. I am out of here because I got to go do stuff. I got to get out of here by 10 o'clock. So you guys have a great day. I will talk to you tomorrow. Remember, Trendspider sale. It is on for only 4 more days. I would get this one. It makes no sense to me why somebody, if you're experienced, get the enhanced. But this is a tool that I use every day, that I show you guys that I use every day. I don't know why anybody wouldn't, if you're listening to me, I don't know why you wouldn't get it. But again, that's just me. Everybody has their own process and procedure. I developed this one over, the last 5 years, and I have since I retired. So I retired in January 2020. It is now December 2024. I have 2.5 times. No. 1.5 times the amount of money that I had. And that's after retiring. And remember, I didn't have income for 2020. Well, I did have severance for 2020 until June, but made significantly less in 2020. 2021, I think I made $25,000, $10,000, somewhere in that neighborhood. 2022, and that was salary. That was like, I worked a couple of games. No, I'm sorry. I think I made all of $7,000 in 2021 because we were just coming out of COVID and I only did like 2 or 3 MLS games. 2022, I think I made $20,000 in income. 2023, I made $30,000 worth of income with the podcast and stuff. And this year I'll make about 120 off the podcast and maybe about 10 off of MLS. So I'm doing fine this year. But again, the amount of money that I made was buy and hold using Trendspider and seeking alpha. So I think it's, done its job. And so when I tell you that these tools work, it's from managing that big portfolio while I'm retired and I don't make money and I haven't had a drawdown in that account. So even though 2020, I had enough cash sitting on the sidelines that I can work, that I didn't, and I still have enough cash on the sidelines that I don't have to work. So it's a good place to be. And that's why I say the tools that I have, they didn't get me there. Free tools got me there. And then these tools I would still probably be up from 2020, but not the amount that I am. Trendspider and Seeking Alpha, it kind of put the afterburner on the gains. And that's why I believe if you put in the work and you understand technicals, and then you Seeking Alpha, you don't even have to understand fundamentals. You don't even have to look at stuff. The virtual analyst report tells you everything. So that's why I think those two tools, between the bundle and Trendspider, let's see, the bundle, $639, $777. What's that? $1,300. $1,300 for me isn't that difficult to make. To actually pay for those tools. You could use free tools, and I think you could, say you have $100,000 in your account and you're actively trading. That's meaning that you're actively trading and managing a portfolio. $1,300 is 13% of that. A gain of no, I'm sorry, that's 1.3%. What am I saying? 13%. 1.3%. If you don't think that the tools that is worth 1.3%, like you can't beat 1.3%, the S&P by 1.3% using charts and fundamentals from Seeking Alpha. That's you. Hey, Chris. Good morning. I didn't see you there, Chris. But okay. I'm out of here. It's 9:06. I'm 5 minutes late. See you guys. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.